All right, Colgate-Palmolive's 2024 10K is out, and we're going to get straight to the point. We're cutting through all the corporate jargon to give you the hard data, the numbers and disclosures that really matter if you're a serious investor.
So here's the big question, the one that every analyst is debating right now. Is Colgate a rock-solid, reliable dividend king, or is it a mature company that's really starting to struggle for growth? The answer is buried in the 10K, and we're about to dig in and find it.
To do that, here's our game plan. We're going to hit 5 key areas fast. How stable is the core business? What are the financials really telling us? Where is future growth supposed to come from? What are the biggest risks? And finally, what's the bottom line on its value as an investment?
Okay, first up, let's analyze that core business and try to put a number on just how wide Colgate's global moat really is.
I mean, just look at the sheer scale of this operation. We're talking about being in over 200 countries with powerhouse brands you see in practically every home. This isn't just about being big, it's about being everywhere. That is the very foundation of its stability as a consumer staples giant.
Now, this is where it gets really interesting. Check this out. About 2/3 of all their sales come from outside the US. Now, on one hand, that's incredible diversification. A recession in one country doesn't sink the ship. But on the other hand, and this is crucial, it means they are massively exposed to foreign currency swings and political drama. We're definitely going to circle back to this.
And here it is. This is the moat in one number. In their most important category, Colgate controls a mind-blowing 41.4% of the entire global toothpaste market. That's not leadership, that's dominance. It gives them pricing power and a brand loyalty that is incredibly tough for anyone else to even chip away at.
So we see how dominant the business is. Now let's follow the money and see how that translates into returns for investors. Section 2. Let's talk numbers.
You have to understand this core part of their playbook, something they call funding the growth. The idea isn't just to sell more stuff. It's a company-wide obsession with cutting costs everywhere. New materials, less packaging, squeezing suppliers, and then they take all those savings and plow them right back into marketing and R&D. It's a self-funding machine.
Okay, this is one of those details you absolutely have to catch in the fine print. On the surface, Colgate's gross margin looks really strong. But here's the trick. They stick their shipping and handling costs in the SG&A line, not in the cost of sales like many competitors do. If you adjust for that, their real gross margin is actually 880 basis points lower. You have to know that to make a fair apples-to-apples comparison.
And this right here is a huge part of the bull case. Look what they did with their cash in the fourth quarter alone. They spent over $450 million buying back their own stock. That's a direct return of cash to investors, and it's a huge signal that management thinks their own stock is a good investment.
All right, so that's the engine room. Now let's look at the road ahead. Section 3. Where's the growth going to come from? Yeah, when they talk about innovation, it's not just some buzzword. Here's a perfect example. By the end of last year, about 75% of their toothpastes worldwide were in these new recyclable tubes. Now, that's not just a nice environmental story. From an investor's perspective, it's a massive selling point that helps them win with both retailers and consumers.
Of course, the other way to grow is to just buy other companies. But the 10K is really clear about the dangers here. Trying to merge two different companies is a minefield. It distracts management, and you always run the risk of overpaying for something that doesn't work out, forcing you to take a big write-down later.
And that leads us perfectly into our next section, the risks. And these aren't just my opinions. These are the headwinds that Colgate's own management team is telling you to watch out for.
Make no mistake, on a day-to-day basis, this industry is a war zone. They're fighting off giant global competitors, nimble local brands, and cheap private labels from the supermarkets. E-commerce is constantly squeezing their prices, and if they stop innovating for even a second, they get left behind. It is a relentless battle.
Now, let's zoom out. Remember that 2/3 of sales are international? Here's where that can really hurt. If the US dollar gets stronger, their overseas profits are worth less when they bring them home. Add to that volatile commodity prices, inflation making people trade down to cheaper brands, and the constant threat of tariffs or political chaos. These are massive forces completely outside their control.
And hey, don't just take my word for it. This is a direct quote from the company. Management, in their own filing, is telling you that they expect conditions to remain challenging. When a company uses language like that, you sit up and pay close attention. They're essentially flashing a big yellow warning light.
So we've looked at the business, the financials, and the major risks. Let's put it all together and figure out the bottom line. It's time for the final investment summary.
So here's the final scorecard.
the bull case versus the bear case. The bulls will tell you to look at the fortress. Dominant market share, iconic brands, incredible cost discipline, and a real commitment to shareholder returns. The bears will point to the weaknesses. All that exposure to global volatility, brutal competition, and the fact that even management is telling you the road ahead looks pretty tough.
So there you have it. We've laid out the hard data from the 10K. You've got the rock-solid fortress-like stability on one side, and you've got some very real, significant headwinds on the other. And that leaves us with the ultimate question every investor has to answer for themselves. With all of these challenges piling up, is Colgate's legendary brand Moat still wide enough to protect its value?